Hello, my name is Marty Foreman. I'm a state specialist at the University of Missouri Extension, Ag Business and Policy. In this video, I'll review USDA's World Ag Supply and Demand Estimates. So let's begin with the headlines from the report. Essentially, in this update, USDA revised corn demand up a bit and then lowered ending stocks for both the current marketing year as well as the new crop 21-22 marketing year. For soybeans, USDA lowered the crush 15 million bushels, and that resulted in an increase in ending stocks for the current marketing year, and that followed through to the with no changes in the demand side for next year, and a corresponding increase in ending stocks for new crop as well. We'll take a little closer look at these as we go through here. Let's start with corn. So on the left-hand column here is the 2021 marketing year, and most of the changes, of course, were in the old crop. USDA revised corn for ethanol up 75 million bushels as we continue to see, fuel demand increase as we come out of COVID. Also revised exports up 75 million bushels. Led by that strong demand from China for U.S. corn. So the combination of those two resulted in a 150 million bushel increase in use and a corresponding 150 million bushel cut in ending stocks down to 1.1 billion bushels. I'd note here the stocks to use percent down here at the bottom, the 7.4%. That matches a 25-year low for stocks to use for corn back to the post-drought year of 2012-2013 marketing year. So stocks for corn are tightening. So the only real changes for the new crop was just this lower carryover to the new crop marketing year. So lower beginning stocks, no changes to any of the other demand forecasts. And so we have 150 million bushel lower carryover ending stocks for the 21-22 marketing year. But things are tightening up. I note that this trend line yield here at 179.5. So be a lot of there's really not much margin here. If yields fall much below trend, it's going to tighten things up pretty significantly. So not much cushion here from some kind of a weather issue that would develop that would threaten corn yields. Later on this month, June 30th, USDA released the Acreage report, and trade is expecting that this planting intentions number at 91.1, we could wind up with a higher acreage forecast or estimate compared to intention. So we'll see, where that lands, but expecting an increase there in the final acreage report from USDA. Looking at the individual items on the demand side for corn, feed and residual use at 5.7 billion bushels. They didn't revise that. May see a revision there, perhaps, though not till after the stocks report, also released at the end of the month, along with the acreage report. So any adjustments to feed and residual, we'll probably see that in July following that stocks report. Generally speaking, the trade expects this number could wind up being a little bit higher than 5.7 billion for the old crop. Exports, as we mentioned, up 75 million bushels from last month to 2.85 billion. That's the red line here. You can see that's a record high for corn exports. Then with recovery in South America's crop, expecting exports to pull back a bit, down 400 million bushels into the new crop marketing year. Corn for ethanol, as you mentioned, continues to recover. This is the green line. So not back to the previous highs, but in a recovery from the decline during COVID. Looking at Brazil and Argentina, we've seen a lot of dryness in Brazil's safrinha crop. That's their winter crop, or their second crop corn down there. USDA revised their production down 3.5 million tons from May down to this 98.5 million ton figure. The trade is actually looking for a number eventually lower than this. A lot of the private forecasters are down to 95 million to even into the low 90 million ton area for Brazil's final corn production. CONAB, Brazil's crop forecasting agency, is also below 98.5. They're down closer to 96.2 million tons for the crop. With that cut in production, USDA lowered Brazil's exports by 2 million tons from last month. For Argentina, no change in Argentina's corn production estimate for this year, but they are looking for a recovery next year up to 51 million tons. If we're looking at a year from now, production estimates, clearly pretty preliminary, but nonetheless estimates for next year with 4 million ton increase for Argentina and all the way up to 118 million tons for South America. So that'd be combined a 23.5 million ton production increase a year from now for Brazil and Argentina. China, USDA really didn't make any changes to China this month. I guess the issue here is this black line, which is China's imports. So you can see the big surge in imports from 7.6 million tons in 2019. 20 marketing year up to 26 million tons this year. While they didn't change that, expectations are that this number could wind up a fair amount higher than the 26 million tons. And USDA currently is holding that number at 26 million tons for the new crop marketing year. So we'll see where we'll wind up. But I believe USDA's got sales to China just from the U.S. Between around 23.5, 24 million tons already at this point, with still much of the marketing year left. And then what's going to happen next year for exports to China? And I would point out that China's already booked about 424 million tons of corn for the new crop marketing year. So they're off to a fairly strong start for exports into the new crop as well. Production, not a lot of change here, just the change in global production with the cut to Brazil. No other changes on the global front for the 21-22 marketing year. To shift gears for a moment, this isn't something from the report, but I just want to point out, because we're moving into that time of the year where trade begins to pay a lot of attention to weather, of course, and crop condition ratings. So the early season condition ratings for corn reported earlier this week, it's 72% good to excellent. So that's down a little from the early ratings last year, but is close to the long-term or 10-year average crop rating, which is this red dotted line here. And you can see, the ratings do tend to decline seasonally as you move through the summer months and into the early fall. The issue here, I've got a graph here later on the soil moisture situation, that we've got a lot of dryness across much of the northern corn belt, particularly in the northwestern corn belt, which is raising some concerns. So we'll see how this tracks, but with this dryness, unless we have timely rain, there's probably risk of downward pressure on this condition rating. I would say as we move closer into midsummer, mid to late summer, this the condition ratings become a lot better indicator of what final yields will look like. At this point, they're still more preliminary, but as you the correlation between crop ratings and final yields gets a lot better as you move toward mid to late July, early August. Looking at the price chart for a moment, you can see this is the nearby futures. So this is plotting nearby futures, and each of these bars is 1 month's worth of trade. So this price chart goes back to prior to 2012. You see the high back in 2012, the all-time high there at 849. The highest thus far for corn prices for the nearby contract back in May was $7.35. So prices have pulled back from that high, but these two levels I think are sort of the key levels above the market to watch. If we can clear this 735, there's not much resistance, technical chart resistance above that level up to this 849 level. If you're looking at the December futures contract, the contract high thus far is 638. We've seen the low here. You know, the last USDA report was kind of marked the high, the contract high, and since then we pulled back, and then we've recovered back close to that 638. So this high at 638 is a key resistance level for the new crop, with obviously I think pretty strong support down here around this $5 mark. So a pretty broad range for prices here, and I think we're likely to see that kind of volatility continue as we get with this dryish pattern that we've got, and the need for a fairly strong corn yield and a little cushion from stocks. So just kind of summarize, Brazil's final corn production is going to be a factor for prices. What's China's buying program going to look like? This dryness across the northern corn belt and the Dakotas is clearly a concern. Condition ratings are fairly good at this point, but threatened by this dry pattern. The funds are still holding on to a pretty significant large net long position. They've backed off from the extreme highs several weeks ago at over 400,000 contracts net long, but they're still holding something just under 300,000 net long, the corn market. We've seen some of the trade roll their positions from the nearby contracts out to the new crop. Trade does expect the acreage to come in higher than planning intentions, so we'll be watching that very closely. That's the next key report out here at the end of the month. As I mentioned, no real cushion from below trend yields. So anything that threatens to the yield's going to be market's going to react to. One thing I would point out is that we've seen inverses in the futures market with these nearby contracts at big premiums to the new crop. Now we've of late begun to see these inverses come in a bit, weakening, and we've also seen a little bit of weakness in some of the basis levels. So this is kind of a caution at this point. So typically bull markets, you tend to see the inverses widen out rather than weakening. We'll see whether this is anything more than the funds rolling positions out to the new crop or not, but something to a little bit of a caution flag here, I think, with the spreads weakening. Next key reports, USDA acreage and stocks report out on June 30th. So that's the next key set of reports from USDA. Looking at the soybean balance sheet, really the only change that USDA made to soybeans was they lowered the crush 15 million bushels on the idea that we're going to see a little softening of meal demand, and we also have a bump up in the soybean meal imports. So put a little bit of pressure on the crush, and that fell through to uptick in the ending stocks by 15 million bushels. So this came in slightly higher than what the trade was thinking. Then that fell through to next year, to the new crop supply demand, similar increase in ending stocks for soybeans, up 15 million bushels. But these stocks levels are still historically very, very tight, and 3% stocks to use and only 3.5% next year. So the same points are made with corn. We really have no cushion from some kind of a threat to the soybean yields here. Anything that threatens to pull this yield down more than a bushel or two is going to be reflected quickly in the market. Again, Brazil and Argentina. USDA did revise Brazil's production up 1 million tons to 137. Trade was really expecting no change there. So that was seen as a mildly negative for prices. they are the forecast though for next year. They didn't change it, but it looking at a 7 million ton increase to the crop soybean harvest a year from now to 144. Soybean production was unchanged from last month at 47 for this year, but production expected to rebound to 52 million tons next year. So the increased production next year is likely to put some pressure on our soybean exports out of the U.S. For the 21-22 marketing year. As I mentioned, soybean stocks to use, this blue bar here, still very, very tight down here, around 3%, give or take. So no cushion from yields. They didn't change the price forecast this year for soybeans, held at 1385 for the new crop marketing year, and that's up 260 from this year. So a strong price increase on a season average basis. The soybean price chart, this is the month and year by futures, similar to what we looked at in corn. So the high thus far is from back in May at 1668, pulled back from that level in the July contract currently. The all-time high back here in 2012 at 1789. So again, these are key overhead resistance points to keep your eye on. Prices push through the 1668 again, not much resistance in the chart, at least until you get back against that 2012 high. The November contract, that the December futures in the corn hadn't made a new high on this recent leg up, but the soybeans did manage to make a new high with the contract high at 1480, pull back from that level, but haven't really confirmed a top in this market, I think, based on the chart patterns at least. Then we've got support first, I think, around 1428, and then that May low here at 1326 is the stronger support level. So something down below this is 1326 level is really what you probably would see at this point to confirm a long-term top in the soybean market. So again, old crop soybean supplies remain tight. The market's really focusing more now on the new crop situation. The condition rating for soybeans is at 67%, good to excellent. And that's near the long-term average, similar to corn. Trade's also expecting final acreage on beans to exceed the intentions of 87.6 by a million or maybe 2 million acres. So we'll see how that turns out. But even with additional acres, you're still looking at a fairly tight supply ending stock situation for soybeans. So a lot of pressure on a favorable outcome for yields. I would also mention that here of late, early this week, in fact, soybean oil futures reached their a new all-time high. So we've seen some pullback from that high in the last few days, but nonetheless, a new all-time high in the soybean oil market, which is one of the products that have really been kind of leading soybeans higher. Briefly on wheat, USDA did update their winter wheat production estimate, and they added that or factored that into the supply and demand balance for wheat. They did make an adjustment for the old crop exports, bumping them up by 20 million bushels, and then taking that ending stocks down similarly by 20 million bushels. You can see, though, the stocks to use ratio, we're really not that tight on wheat stocks here at 40% stocks to use. Looking at the new crop, which is really most of the focus is on, we saw them reflect this increase in the winter wheat production, raising the all wheat production up 26 million tons. That's a 72 million bushel increase over last year. The net change really wasn't too significant, though, in the total supply of just 6 million bushels, with the 20 million bushel decline in beginning stocks against this 26 million bushel increase in production. So we wind up with actually total supply down 84 million bushels year over year. They did increase on the demand side, did increase feed and residual 10 million bushels up to 180. You can see that's a pretty significant increase over last year. So a lot of chatter in the trade about where feed and residual is going to wind up with wheat. And a lot of your wheat feeding is in the summer quarter, and wheat has been pricing itself into feed rations, particularly out in the plains. So ideas are that this 180 could be wind up even higher. We won't really get a good read on this though until after the September 1 stocks report. Exports, no change for the new crop at 900 million bushels, but that's down 85 million from the old crop marketing year. Stocks decline, ending stocks declined to 770, down 82 million. Stocks are tightening, but still relatively large carryover on wheat here domestically. On the production, winter wheat productions for a moment, it increased 26 million bushels up to 1309 million from May, and that's up 138 or almost 12% year over year. The winter wheat yield is now pegged at 53.2. That's up 1.1 from May, and if we realize that, that'd be the third highest winter wheat yield on record. With respect to Missouri in particular, they revised Missouri's yield up 2 bushels to 70, which if again realized, that would be a record high winter wheat yield for Missouri. This really is no change, implies the spring and Durham production combined at 589 million bushels versus 655 last year. Thinking is that the spring wheat area may come down from last year with the high prices of corn and soybeans, that those crops may gather some of the late planting changes in the spring wheat country. Looking at the futures, this is a nearby futures contract, which is now the July. You can see the high so far on this move up is 769.5, and the all-time, or the high back in 2012, I should say, is 947. Looks like long-term support right around this $6 mark. So a pretty broad range here on prices, but you can see the kind of volatility that we've been experiencing of late. Wheat, though, is really more of a follower than a leader, taking a lot of its cues from what's going on in the corn market. And plus, we're moving into the harvest season for wheat now. Harvest is beginning to ramp up, so we'll see some pressure from a fairly decent winter wheat crop in the southern and central plains. The real threat is what's going to go on with the northern plains wheat crop. We've got a lot of dryness across the northern plains and the Pacific Northwest, providing a threat to that crop. So we'll have to see how this plays out. We don't have. We'll begin surveying those production estimates for the plains later this summer. As I mentioned, USDA, I think, expect USDA to boost their wheat feeding estimate. Global stocks, really no change. There's some modest revisions to the global numbers this month, but essentially stocks to use held the same at 37.5% stocks to use. China imports, that's another question, I guess, going forward longer term, is are we going to see China step up and buy wheat more aggressively as they look to fill a lot of their feed demand needs. I guess shifting gears a bit, I just wanted to show the soil moisture map. This is as of June 8th. You can see all this red here across essentially the northern half, 2/3 of the Corn Belt, with a lot of emphasis on this dryness in the Dakotas, and that's even creeping into sort of northwestern Iowa as well. So, and then a fair amount of dryness up here through Michigan and even into the eastern part of the Corn Belt. a lot of dryness here in the Pacific Northwest affecting wheat. Some of that timely rain has helped benefited the wheat crop. So anyway, as far as the row crops go, all this dryness is raising concern about forecasting the need for timely rain and how that's going to impact yields as we move through the summer. Acres, also wanted to touch on the acres because we've got the acreage report coming out on June 30th, at the end of the month. These are the estimates from intentions for corn at 91.1 million acres and soybeans at 87.6. Trade is expecting both of these numbers will increase from these levels. Well, that does it for this month's update. Be sure and check in with us following USDA's acreage and grain stocks report set for release at the end of the month. You can, if you have questions, you can email me or phone me at these numbers provided. You can also connect with us on our website or through Facebook or YouTube. Okay, thanks for watching.